Damn it. I will re-enter in this trade again. I need just some sort of confirmation. I just don't want the price to run without taking me. I would have to lower my lot size for this if it runs without me. I need at least this candle closing for me to enter again. The same trade, the same narrative, everything is the same. I got out because the invalidation criteria. 10 seconds, no FOMO. 10 seconds. Okay, just gonna 0.4. No, 0.4. I'm gonna buy it again. The risk to reward in this trade is good. Now I'm getting a 1 to 1 risk to reward ratio. It's not bad.
Now I'm getting a 1 to 1 ratio.
I was aiming for about 1 to 3 risk to reward ratio, so we'll see. 'The narrative was the same, everything was the same. I had to re enter. 31, not bad. I'll take it. I'll take it. Okay, so 1 to 1 risk to reward ratio, that was the first thing. If the price comes to this point again, I'll try to buy it again and I'll aim for 950. I could have let it run to 950, it was my initial target, but we'll see. 950 is the point which I was aiming for. So it can come to this point 950. I got out on 1 to 1, but it's the Bitcoin is itself moving towards 950. So if it gives me a re-entry again, I'll try to buy it again, aiming for 950 again. So I exited my trade. This was the initial risk on this trade. Basically, it was a 70 points risk, and I got out on 70 to 80 points. Closed it, but 950 is the point which I can leave a runner on. I was in with a trade of 0. 0.4, so I could have, okay, I did not, I could have let it run 0. 0.2, the remaining lot size, the 50% of the lot size, and aim for 950. Okay, so anybody who was here yesterday, I given some targets for gold. Did anyone execute it on gold? Everybody should have this on your chart. I mentioned this specific green box for swing trades on 8th October. So, okay, this was the first criteria for the swing trade. This was the second criteria. I mentioned if you missed out on this specific trade, you can enter it on 627. Still going. Still going. Okay, 950 is the initial target. When the market will reach 950, it will stall for a moment and may get a rejection from that point. So, yesterday I mentioned about three different targets on Bitcoin in three different scenarios for Bitcoin. So, everything played out perfectly. Come on. Damn it, got out really early. 957. 957 307. 957 was the target. Wizard N17. Brother, how are you? This trade was 1 to 3 risk to reward ratio trade. It was really perfect. I executed here exactly here. So I got out on 1 to 1, but my initial target was 957, but I was not willing to just let the basically partials run. I closed the whole trade for some reason, and it just kept on going. But even if it comes back to this point, 6657, I'll try to re-enter again, aiming for 960. Brother, I'm good. I'm good. Okay, we're coming back. Okay, let's try 684, 623, 684, 623. You watched my yesterday's stream. I'm referring for the gold. You should have this on your chart. I mentioned this multiple times last 2 or 3 days. Okay. This was the area for the swing trade. Okay, have this on your chart. I've written this. Okay. And the criteria was to take a swing longs from this position. Swing longs, and I also mentioned 26, 27 yesterday. Okay, if somehow you miss out on this specific trade, watch how precise this is. This specific trade you can re-enter at 26, 27. So both of the levels work like exactly perfectly. 27 is still relevant. Let me just check. Yeah, 27. Okay, it's not bad. 26, 27 is still relevant. If the price comes to this point and give a good reaction, I would still not sell it. Not interested in selling gold at all. If the price comes to 26, 27, it might chop around a little bit, but it can react similarly like this. It can chop around, but eventually it will use this as support. This was for the gold. Okay. Lol, I sold gold and break even. Take profit is higher than the area you're planning to buy it. Okay, okay. Yes, you can sell gold, but in an intraday. Basically, when the market is in an overall uptrend, whenever you are taking the counter trend trades on a smaller time frame, so you can sell gold using the ATR. That's the width of the market. It can make you some good setups, but eventually the market's gonna turn towards the upside. Okay. These are the narratives, basically, right? Okay, like how big is this written? Like, have this on your chart. This was the criteria I specifically mentioned. Okay, if we move above this point, okay, after the CPI, I will be looking to go long and swing longs from this point onwards. And if I miss an entry from this point, I'll use this as an entry point again. And this point is still relevant, and this point is still relevant. So in the higher time frame, I'm looking to go swing longs. I can take intraday shorts, but that would be considered from my point of view low probability trades. So I'll just wait for the market to come to this point, give me some sort of a reaction from this point, closing above something like that. Then I'll try to enter with a tight stop. Okay. This was a very good trade, a 1 to 3 raised to reward ratio trade, but I got out. So I'm going to try to buy this again. No shorts on Bitcoin. Okay, if I were to short this, I would be interested in shorting it from 960. If it moves above 960, then the next level would be 61,300. These are the points which I'm interested in taking a short. If it invalidates these two levels, then we are moving like up towards the upside. So 32 and 93. Quick question: do you have a rule in place if you enter a losing streak? Not specific anything, but basically, whenever I'm losing, basically, I'm a trend trader, right? If I'm on a losing streak, I'll just give myself time or move to a higher time frame. So, if you have watched that video which I've mentioned here, there is an early indication of a range, right? So whenever if I'm on a losing streak, there is a very high probability that we are in a range. So I'll just wait for the price to move to an extreme, then put my stop loss very tight, right? So my losing streak is a bunch of paper cuts, a lot of paper cuts. I may lose basically 5 trades in a row. So if I win 2 trades, that will recover the whole thing. The market has two modes, right? The trending mode and a ranging mode. A trending mode and a ranging mode, right? If the market is trending, it, whatever it's doing, it's exactly like diametrically opposite, to what happens in a ranging conditions. So, what applies on a range is exactly opposite to what applies on a trending market. That's a fact. Okay. For example, if the market is in a range, I would be looking for a close above, close above, close. In a ranging condition, the market will make sure that it closes above to move below and closes below, then close above, then close below. Okay. So if I'm doing everything right and I'm still losing money, that means we are in a range. I cannot emphasize this enough. If ranging conditions are exactly opposite to the trending conditions. So whenever you talk about like liquidity sweep or taking the lows or taking the highs, ICT traders are generally speaking, they're range traders, and that's scared trading. Their basic logic is range trading. Okay, majority of the traders won't succeed in a trending market. Even ICT himself, when the market was at the all-time high, he wasn't able to make money. Like forget about ICT, he cannot even trade. But generally speaking, right, a lot of his followers were not. They were like, "Oh, it's all-time high and it's in a new territory." But I was making money hand over fist. Like really, that was the best moment. That was the best trading I had. I'm talking about start of the 2024. The market was at the all-time high, and I was making a lot of money trading the trend because it was at the all-time high. So those people were looking for a sweep below. So no, 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 not for me. Have you backtested the closing, the monthly volume balance or not? Yeah. Learn to identify a range. That's the hardest part. Okay, learn to identify and differentiate between when a range start and when a trend begins. So if you are able to do that, you'll just succeed because you'll be applying the right tools at the right time. Okay, The main problem comes when you don't understand when it is the range, when it is a trend. You're using the trending tools at the ranging market and ranging tools at the trending market, and there's nothing other than these two. If you generalize, look from a very bird eye view, these are the two categories you can put trades into. Okay. I checked them. I was struggling to backtest it, though, since my trading plan is for sessions. Okay. You're breaking the market into sessions, right? Okay. If it gives me a chance to re-enter, I'll enter again at about 700, 60,700. If you think about lot sizing and probability, so you don't have to write the whole trend. Risk to reward lot sizing is will cover up for your missing out on big trends. You don't have to write the whole trend to make money. The same amount of money you can make with a high probability 5 points move, right? if you have a good entry criteria and a good probability trade. But if you generally speaking, if you think in terms of the whole market is connected, it's not chopped up between sessions. Everything is connected. What happened a week before is connected to today. So chopping up into sessions doesn't really help, right? Specifically in the Nasdaq, if you are expecting a move happening at the open, it won't happen at the open, right? If you are expecting a trend at the close of the market, it won't happen at the close of the market. It will happen in the Asian session. So whenever you expect a move, everyone is expecting a same move. It won't happen at that specific time. It would be a delay for another 3 or 4 hours. Then it's gonna go. So majority of the trends, when you expect those trends, it's gonna happen in the Asian market and the London market. I'm talking about Nasdaq. So no, nothing to do with sessions. It's just your mind, your categorization of your mind. You want to comprehend the market and you're trying to chop it up into pieces and putting it into categories, because that's how our mind works, right? Putting things into categories, categorization, prioritization. So generally speaking, the whole market is connected. You don't have to chop it up into sessions. So whenever you're looking at the sessions, why, matlab, in a sense, what would be the base of the session? You're taking the high of the session, low of the session, right? So that logic from the base is faulty. From the base, that logic is faulty. That logic is flawed. I know, right? See, I'm not worried about any sessions. I'm just looking at this specific price. If it gives me this price, I'm gonna buy this. So I exactly know I've back tested those sessions. Back tested New York, everything you can understand, right? So just not neglecting or discarding your ideas and just saying what I know, right? Okay, I'm gonna give you a food for thought. Um, Whenever you're talking about a session, what is it specifically that you're talking about? Think about it. Because what is you're saying a session is nothing other than time itself, right? So in terms of time, what are you talking about? What duration are you talking about? To be exact with my question, what is the duration you're talking about when you're talking about a session? Ideal would have been if the market came back to this point and gave me a re-entry again, but still I'm not in this trade, but generally speaking it's moving towards 957. Okay. This was an extremely good trade for 1 to 3 risk to reward ratio. I got out early on 1 to 1, aiming for 958. So when I'm talking about duration of time with volatility will be higher than usual. No, that is correct. But if you are looking at time, whenever you're talking about a session, you are just talking about a 6 hour candle. Is it true or not? You're talking, say, 3 6 hour candles, right? See, so think about it this way. Okay, you're taking a 6 hour candle and you're trying to take out the high of the previous 6 hours and low of the previous 6 hours. Can you just enter a 6 hour candle time frame on TradingView and go and back test it? It will be really fast for you to look through your system and see if it works or not. Is as good as 60 to 55% probability. And in the trending market, the market really won't care about previous 6 hours. It will just the buying pressure of the London session. The London boys will move it up. Then the New York session will move it up further. So in a ranging conditions, everyone who will be trading an ICT concept will be smart as, because everything will work in for them in a ranging condition, right? So they'll say, okay, because for example, whenever something happens, the mind will ask a question: "Okay, why does it happen?" Because it wants to know the source. So it's gonna, and the neurons, they're gonna fire together, they're gonna wire together, they're gonna associate their wins to that system. But overall, it's a ranging market. They're just buying the lows, right, and selling the highs. So it's gonna work in a ranging market until the range breaks, and they will not know what to do after that. The market won't take your stop after. It's in a trending market. It won't care. Right? Visit, I'm talking to you in this way. I'm assuming that you will understand what I'm talking about. I don't go into much detail with these things. With other people, because I'm assuming that you will understand and you will backtest these things, because no matter what I say, nobody backtests these things. So not my fault. Okay, the next level is 959. Yes, exactly. So basically, trading is the most loneliest and boring job in the world. Yeah, the most miserable, boring ass job. If it's not boring, then there is a problem. Either you are a newbie, or you don't have control over your emotions, or there's uncertainty involved. Uncertainty will always be involved because we as a trader we deal with uncertainty, and that's why we earn more. But uncertainty from the perspective of your system, every day is a new day for you. That's really a problem. That's a problem. Okay. In all of this chaos, your system should be like, you have should have a very rigid system with, you exactly know what you want, you exactly know what you don't want, right? So nice. Have you ever thought about why ICT has built the system against the trend and everything? It's its own demons, right? It's its own personal demons. Okay, the next point would be 61,070. 61,070. Personally, I want, okay, it may not happen, but I really want the price to continue in its uptrend for Bitcoin. And if you missed out on the yesterday stream, generally the idea is we need the price to move above 61,800. Yeah, this is a 1,000 points range. If you move above this point, then I can take a swing long on Bitcoin. So that's the criteria or narrative I'm looking at. Okay, that's nice. He's a contrarian. Yes, yes, he definitely is. So, if you have a tendency to be basically right, a contrarian, so you will associate or you will project an image which you can comprehend, right? Okay, why does it do the things it do, the market do? Somebody is against me, right? Somebody is against me. So you understand where this coming from. The archetype of the market in his mind is some sort of a market makers. And there are a lot of people, mad people in the world who have the same tendency, right? So whenever their mind will ask, they'll have a exact logic why it, why it happens, why it happens. The market makers. There was a quote from, I don't like the guy, but the Robert, he said, a question opens up your mind and a statement closes it. So you should be very careful what statements you're putting it in your mind to close it, right? Nice. So if you want to know where the gaps come from the fair value gaps come from, watch like one or two L Brooks videos. You'll understand where the fair value gaps come from. So where the measuring gaps come from. And if you want to know about N dog and VOG, I already mentioned what N dog or N VOG is really. So it's a bunch of concepts. Where does the TGIF come from? TGIF is the oldest setup in the book. Okay. TGIF is people oldest in this industry will. Yeah, yeah, I mentioned L Brooks. I mentioned L Brooks and what Brad Wolf on the L Brooks. I'm familiar with the like everything you can think about. No, no, no. Brad Wolf is the guy who comes on live on the L Brooks channel and like review his channel every day what happened in hindsight. So I use whenever I'm learning or I'm taking an input, basically from my mind's point of view, it's an input, right? Data, and I have to filter the data. Everybody I listen to, I use them as input, and if somebody has paid attention to the chart for like obviously more than 20 years, those are my supercomputers. Why would I not utilize it? Okay. I've taken inspiration from a lot of people, but my system is like is has nothing to do with anyone. But I'll still listen to a lot of people. That's the scientific way, right? Because so yeah, if you wanna know about where the gaps come from, check out Al Brooks, the fair value gaps. He will not mention it as a fair value gaps. He will mention it as a gap. He'll also mention a measuring gap. So it sounded complicated. The market is complicated. Okay. It's like somebody is building a rocket and you want to make a rocket, but somebody is presenting it to you in a chewable way. So definitely you'll be more attracted to the digestible part, right? But if it's a rocket, it needs some rocket science, right? The market is complex. I haven't taken any of his courses. I'm just gonna be very clear. I haven't. I've just along the years. Sometimes I've watched these videos of Brad. Okay, complicate and simplify to make. Yeah, he talks about a lot of things. He has his own encyclopedia about for basically, like, he has about 300 patterns. Who's gonna go through the 300 patterns? It's more, I understand what your point of view, it's complex, but for example, if you are, you can take inspiration from a lot of people. That's the main idea. If you mention anybody, I'll know. I was just talking about L. Brooks because I was talking about L. Brooks, right? So I know a lot of people in the trading community, right? But mention L. Brooks because of the gaps I was saying. Okay? Gaps, fair value gaps, or oh, lol, oh, Malay. No, no, you're really testing my. What I said, but generally speaking, a lot of scammers in the industry. I know the people who are legit, right? Uh, like even if they are not well known, I know the people who are legit. That's what I was trying to say. Like Mark Mavini ho gaya, aapka next would be a lot of quant traders. Uh, so BBMA, nah, Malaysian, and does he trade Malaysian SNR? There is a time that Malaysian SNR was hot, right? I don't trade it. I've heard about people trading it, and you wasted a lot of time on BBMA, right? You mentioned it earlier. See how perfect this bottom was. Man, I got out really early. Yeah, exactly. You sure have trauma. Understand, bro. It's making me really happy. I want the price to move above 61,800. If we keep on moving like this, we have a chance. But for first, we need to move above 61,300. But I didn't really understand risk management. It's to a point that I know it works. Risk management, oh, whole risk management and lot sizing and risk to reward are those things which gets neglected, and which I really thought for a long time that I understand risk to reward, right? So if I mention risk to reward, people will say, yeah, I know what he's talking about, but no, you don't. I'm not talking to you, but generally speaking, right? When I mentioned, okay, it's a good risk to reward trade, no, it's a good risk to reward trade, the risk is at this point at the extreme is really low relative to the reward I'm expecting. So risk to reward is not like this. For example, okay, if for some reason I want to buy it here, so my risk would be 50 points and my reward would be 50 points. It does not work like this. Risk to reward with respect to the market and its extremes. For extremes, you need areas of interest. For the areas of interest, you need validation and invalidation criteria. And invalidation criteria, and if, for example, the risk is 40 points, that is how my lot size is going to be determined. So Now, for from this standpoint, right, position, it was 76 point risk, 76 point 70 76. Let's 72. See, 7.22 risk to reward ratio. Okay, but at that point I was expecting the price to move to this point, which was close to 3.8, but I got out on 1 to 1. Now, for example, if I am a bear, I would try to sell it from this point. This is an extreme point, putting my stop loss right above this point. So I have two options now, whether to take it directly as it comes to this point. What's wrong with that? The first thing wrong with that thing is if it's coming to this point, it's obviously showing strength. So should I be selling into strength? That's a higher risk criteria. No, I should let it move up if it wants to move up. If it shows me some sort of weakness from this point, I'll try to sell it from this point, putting my stop loss above the invalidation criteria. Mhm. The guy who taught me ICT was saying if we in a point of interest, we have to wait for fair value gap. Well, no, it's a good thing. I mean, it's fair value gap is not a bad thing. I'm not. You don't have to neglect it, right? A fair value gap is a strength, right? So do not neglect anything. For example, if you have started or stopped trading ICT, you can still use a fair value gap as in confirmation. Okay. Validation and invalidation criteria, you can use the fair value gap. I'm not against it. No point I said I'm against it. I'm only against trading against the trend. If you are within the trend, you can use a fair value gap, but it will invalidate your criteria a lot of times. That's the thing now. Can give you a fake out, can give you a mohawk, right? So ICT will like trim it down to, okay, if the first fair value gap is not working, the upper version will work. So every time ICT will be right, and you'll always have a reason why you failed, because it has a lot of moving parts. If the first fair value gap is not working, okay, the upper one will work. If the upper one is not working, okay, no. It must be the order block. What is the order block? The opening of the last high closed. I can exactly tell you, like I've back tested this all. For example, I'm gonna tell you, okay, what's the thing then? Okay, for example, this is a 15 minutes chart, right? Okay, this is the first 15 minutes fair value gap didn't work. Okay, the next 15 minute fair value gap worked, the consequent encroachment of it, whatever you can say, right? If this doesn't work, then it's gonna come to, you'll always have a reason. So ICT, if the market is, for example, at this point, think about it logically. think about it. For example, the market is at this point. I'm gonna do this, some sort of this, so this would be a fair value gap, right? So first, an ICT trader will try to buy it at this point. Okay, it might give a reaction and then close the fair value gap, move to this point. It might have another fair value gap on a smaller time frame, so we will, it's gonna try to buy it again from this point, thinking that we are gonna move up from this point. Okay, what if the market comes to this point? You'll always have a reason why it happened. You think about it. Okay, if it comes to this point, you'll have a reason. Oh, sell side liquidity. If it comes to this point, you'll have a reason that, oh, sell side liquidity. Even if this fails, so you'll have an order block. So what is an order block? You tell me, what is an order block? An order block will always comes at the double bottom. Okay, okay, from where the last close, so basically the low, complete low. Okay, okay, we will have an order block. This candle will be the order block. I hope you understand where I'm going, so you will have clarity that I exactly know the standing point of those traders. Okay, okay, so logically speaking, the order block is always at the low, logically, because the opening of the last down close or of the up close candle is the opening. So basically every high has the order block. This is the order block of that. So this is the order block of this candle. So if it respects the order block, then you will have a reason that it respected the order block and ICT was right. If it does not respect the order block, ICT will still be right, because it's going to take the low and then come back up. So at any point he can claim that he was right, but which one? Which one? So I hope you understand how this works. You understand what I'm trying to say, or not? So you take a cut, take a cut, take a cut, take a cut. Say from one fair value gap to other, to the low, then to the liquidity sweep, then the order block, then it starts to move back up. Oh, ha. So you don't need a lot of those things, because when the price eventually is going to come to your direction and move within your direction, when you take out with the profit, you'll be at break even. Okay. If a strategy has too many, I don't try to explain it. Yes. Yeah. So if a strategy has too many moving parts, okay, it adds a layer of complexity, because at the end of the day you're making binary decision, if and then statements. If that happens, then that. So too many binary decisions is a mess. In consecutive, the market can do anything, yes. So that's the point where the risk management comes. But if you have a lot of moving parts in a strategy, because you will never throw out the strategy. Exactly, I understand where your point of view from the L Brooks, right? But I'm not saying that you go and learn from L Brooks. I personally, I listen to that from, like, sometimes a month, a week or two, I like play the video, what he's saying. I might say something like, just to uh, refresh, basically, because I might think, yeah, I'm just stuck in my own ass. I should be looking, this the growth part of a trader, right? My strategy is fine. Like you have seen, like how it works. I don't have any other basically, which you can say, okay, conflicting ideas or neglecting. It's literally to the perfect. But I still have the urge to learn from other people. So that's why I move around and see what other people are doing. Okay, but you understand this. If your strategy has a lot of moving parts, what I said earlier, okay, a question opens up your mind and a statement closes it. If something goes wrong, you'll always have a reason why it went wrong from the ICT. So you don't want that. Okay. How one more thing, ICT is smart in this. Okay, and I don't know how people fall for this thing. He will track a range from this point. He'll mark the sell side and the buy side, and whenever the market will move to one side, he'll say, yeah, buy side taken, sell side taken. Well, obviously it's in a range, and at the end of the day, he'll be celebrating, and the people will go crazy that he was right, that the market has taken the low or the high. Yeah, obviously, because it's in a range. He won't say what first. Sometimes he will say, because it's a 50-50 probability, sometimes he will be right, sometimes he won't say. And even if he does not say, the market will always have a fair value gap at some point, and every high will have an order block from his standpoint. Okay, the opening of the last down close. Okay, last down close from this is the order block. This would become the inversion. No, it's, you don't want a lot of moving parts. Okay, you wanna be very specific in your own strategy. For example, if you wanna learn how the trend works, you go to someone who has a trending strategy. You wanna learn how to read exact tick by tick price action or risk to reward or any other thing. You can use Tom. I understand. I'm learning bit by bit. Then back to stand low 7% of ICT. The ICT trade will give me simple trust. Okay, you know 7% of ICT. Well, that's nice. Should thank God, because it's a trap. Okay, what I'm telling you is the ICT trap. How people are trapped in this. Yeah, I know 100% of ICT, literally 100%, more than ICT has taught. Right, and I'm saying all of these things, but I don't use any of them. So it's a bitter thing that you don't understand. The way we are moving up gives me really hope that we can move further up. I do not want the price to get rejected off of 61,300. Okay, this was a very exact bottom I caught from the start of the stream. I was aiming initially for a 960 or 57. The next point was 61,072, and the next point is 61,300.
Uh, there was a time I used uh, Winnie in Simpleton. I used to hate Benny for because of Ice City. I used to listen to Shotgun, and I never really got the appeal of his trading. But he is an old man, right? I used to listen to his Shotgun 23's 2023 Shotgun the whole year. He used to come on Twitter. So see a lot of things, a lot of stupid things. Um, but then he started saying the end of the world, then I lost it, bro. Then I said, ah, fuck it, bro. I'm not gonna listen to him anymore. He literally said the world is gonna end and I'm your Moses. Can you imagine? Uh, can you imagine? He really said, okay, the world is going to end and they might even take trading from you guys. So the algorithm is not going to change and I'm going to save you all, and I'll think about me as Moses of you Moses. And I was like, you schizophrenic old man. So he was neglected by his parents at a young age, so that's why he seek validation online. Okay, if the market comes to 831 and 739, I'll try to buy it again. The first buying price was this. I caught the bottom. The next bottom, I'll try to buy it from 831 739. It Yes, exactly. I'm gonna be honest. The thing which I still use to this day is that monthly volume balance from his and in Vogue new week opening app. Okay, he mentioned those two things, and those things I back tested, and the price did reacted to those points, and I thought about it. Okay, why does the price reacts to those points? Then I really thought about it, and I got the answer. It was the close. I hope you understand what I'm talking about. The last time you were here, I mentioned the close. So I realized, okay, he might have given something out of his observation of 25 years. So, not to neglect everything a person is saying, but he inspired me to look into those things. I have still have those things in my system. So I'm gonna, like, obviously you give the credits where they are due, but his silver bullets does not work. Okay, my battery is 5%. A lot of things does not works, but it's closing. He mentioned, no, I'm filtering out everything for you. You just need monthly volume balance, closing prices. That's all. You don't even say it as the volume balance. You say it the closing prices, and don't chop the prices into sessions. You're trading Nasdaq, right?
If you're trading Nasdaq, I'm going to refer you to someone who has a robust strategy. I also have a robust strategy, but I'm not willing to share it, so I can only inspire you to do some backtest. But if you want a robust strategy, I can refer you to someone. But don't purchase anything from that person. Just saying it. Don't give money to anyone. You might also know that guy. You probably know, you know Wheeland, right? Patrick motherfucking Wheeland. That guy is awesome, man. I really like that guy. He might not be like son of a gun. Exactly, yeah. Well, the thing is, he might say some things, but at the end of the day, he's honest. He might not make money from trading as much. He might do some things for entertainment, but one thing is for sure, his strategy is robust. Okay, don't purchase anything from his, but his strategy is robust. That is what I can. Yeah, yeah, yeah. I'm just gonna say it as it is, right? Okay. If I'm saying something, okay, if I'm recommending something, I'm not even recommending Tom Hugard. I don't like Tom's strategy, but Patrick's good. My strategy is better than them. I'm not, but still, it is robust. It's robust strategy, and his way of thinking is good. From not from life standpoint, but from the trading standpoint. I watch all of these guys, but just for entertainment and community, but don't use any of their strategies. Yes, you can. Just join his live stream if you want to know his exact strategy. I can mention you. Using two or three things, plain and simple strategy. He is allowed to trade. I'm just trying to make you profitable, like as fast as I can. So he pushes his course a lot, but you don't really have to. Everything is on his YouTube, and if you wanna fast speed run, I can just mention the things he use, and you can backtest those things. Haha, you sure do, buddy. Okay, we are getting rejected off of this point. If the market comes to this point, I'll try to. Oh my lord.
bearing spread, knowing the his course is, I haven't taken his course, but I know his strategy because I'm watching him from a long time, right? So his strategy is really, 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 really is very simple. A lot of things he does is out of his experience. Okay, that guy has experience, like tough experience. So the main part is the bias, and he's good at navigating within the bias and the entry. His risk management is on point. Sometimes he fuck up like in overall risk management. Sometimes he even fake. I don't trust him completely. I'm not saying I trust the guy and everything, but he might have even photoshopped. I don't know a lot of trades, but the things fundamentally he's using is correct. That much I can tell. Sure. Okay. Okay. Okay, boys. I have to go.